Today's discussion focuses on an important statement that has been gaining attention among Iraq economy watchers and Iraqi Dinar followers. The statement highlights one of the most critical pillars supporting Iraq's monetary system today, the durability of the Iraqi Dinar peg, and the continued operation of the Central Bank of Iraq's dollar auction mechanism. While the wording of the statement may sound dramatic at first glance, the underlying economic message is actually very technical and very important for anyone following Iraq's banking system, currency stability, and future financial reforms. The statement says that the Iraqi dinar peg has survived through war, constitutional uncertainty, interruptions in dollar cash flows, and even prolonged political deadlock. It then argues that the peg has survived because the Central Bank of Iraq's daily dollar auction has continued functioning. Finally, it references major banks and recent actions connected to the parallel market route, suggesting that international authorities are increasingly identifying and pricing the risks associated with unofficial currency flows. To understand what this means, we first need to explain the concept of the Iraqi dinar peg itself. Iraq operates under a managed exchange rate system in which the Iraqi dinar is effectively pegged against the US dollar through the Central Bank of Iraq. This means the central bank actively intervenes in the market to maintain a relatively stable exchange rate rather than allowing the dinar to float freely based on pure market supply and demand. For years, the stability of this peg has been one of the most important economic anchors inside Iraq. Iraq's economy remains heavily dependent on oil revenues, and because oil exports are priced globally in US dollars, the country naturally accumulates large amounts of dollar reserves. The central bank then uses these reserves to stabilize the dinar and support imports, trade activity, and domestic liquidity conditions. The daily dollar auction mechanism has historically been the primary tool used to manage this stability. Through the auction system, banks and authorized financial institutions obtain US dollars for trade financing, imports, and commercial activity. This system allows the central bank to inject dollar liquidity into the market while maintaining control over exchange rate pressures. Now, critics of the auction system have existed for many years. Some economists argue that the auction process created opportunities for capital flight, speculative trading, money laundering risks, and abuse by certain financial networks. Others argue that, despite its flaws, the auction system became necessary because Iraq's banking infrastructure and electronic compliance systems were still developing. This latest statement appears to recognize both realities at the same time. On one side, it acknowledges that the dollar auction has effectively acted as the backbone supporting the dinar peg during periods of severe instability. On the other side, it also hints that international regulators and US Treasury oversight have increasingly focused on how parallel market transactions operate inside Iraq's financial sector. When the statement refers to parallel volume, it is talking about the difference between official banking channels and the parallel currency market. In Iraq, there has often been a gap between the official exchange rate and the street market exchange rate. Whenever access to official dollars becomes restricted or delayed, demand spills into the parallel market, pushing the street rate higher. This creates pressure on the dinar because businesses, importers, and ordinary citizens begin relying on unofficial exchange channels instead of regulated banking pathways. Over time, this weakens confidence in the formal financial system and creates volatility inside the domestic economy. The mention of banks the size of Al-Janub, routing parallel volume, suggests that authorities are increasingly examining the role of certain financial institutions in handling or facilitating these unofficial currency flows. This does not automatically mean wrongdoing, but it does signal tighter scrutiny over how dollars move through Iraq's banking ecosystem. The statement also says, Treasury just priced the parallel route. This phrase likely refers to increased compliance costs, sanctions risk, enhanced oversight, or restrictions placed on transactions connected to non-transparent financial channels. In recent years, U.S. authorities have worked closely with Iraqi regulators to improve anti-money laundering controls, strengthen transaction transparency, and modernize banking compliance systems. This is a very important point for Iraqi Dinar followers, because many people focus only on exchange rate rumors while ignoring the deeper financial infrastructure issues that actually determine long-term currency stability. Currency strength is not driven by speculation alone. It depends on banking credibility, reserve management, fiscal discipline, international confidence, and the ability of institutions to control illicit financial flows. One reason the Iraqi dinar peg has remained surprisingly resilient is because Iraq continues to generate significant oil revenues. Even during periods of political instability, the country has maintained access to foreign currency earnings through energy exports. These dollar inflows give the central bank powerful tools to defend the exchange rate. At the same time, Iraq's foreign currency reserves have generally remained at relatively strong levels compared to many emerging economies facing currency crises. Strong reserves matter because they reassure markets that the central bank can continue supplying dollars when needed. Without adequate reserves, maintaining a peg becomes extremely difficult. The statement's reference to war and constitutional vacuum highlights how unusual Iraq's monetary resilience has been over the past 2 decades. Iraq has faced military conflict, terrorism, political fragmentation, protests, infrastructure damage, and repeated government formation delays. Yet despite all these pressures, the monetary system did not fully collapse. That does not mean Iraq's economy has been stable or free from challenges. Inflation pressures, unemployment, public sector dependency, corruption concerns, and infrastructure weaknesses have all continued affecting economic development. However, from a narrow monetary perspective, the central bank has managed to avoid a complete breakdown in exchange rate stability. For short-term Iraqi dinar implications, this latest discussion reinforces the idea that policymakers remain deeply committed to preserving exchange rate stability, rather than pursuing sudden radical currency moves. The tone of the statement suggests continued focus on managing the existing system, tightening compliance, and controlling parallel market pressures, instead of abandoning the peg. This matters because rumors surrounding dramatic overnight revaluations or sudden exchange rate transformations frequently circulate online. However, the actual behavior of Iraqi monetary authorities over many years has consistently favored gradual adjustment, controlled reform, and cautious management rather than abrupt changes. The Iraqi government and the central bank understand that sudden exchange rate instability could create major economic disruptions. Iraq imports a large percentage of consumer goods, food products, industrial materials, and machinery. A major uncontrolled currency swing would immediately affect domestic prices, purchasing power, and inflation. Therefore, maintaining relative stability remains a core policy objective. Even when exchange rate adjustments have occurred in the past, such as the 2020 devaluation decision, authorities frame those moves as carefully managed fiscal responses rather than speculative currency events. The long-term implications are more nuanced. Iraq continues attempting to modernize its financial system and reduce dependency on cash-based transactions. Banking digitization, electronic payment expansion, anti-money laundering reforms, and international compliance integration are all part of a broader transformation process. If Iraq succeeds in strengthening banking transparency and narrowing the gap between official and parallel exchange rates, confidence in the dinar could improve over time. Increased investor confidence can support economic growth, encourage foreign investment, and reduce pressure on informal currency markets. However, achieving these goals will require institutional consistency and political cooperation. Iraq's economy still faces structural vulnerabilities. Oil dependency remains extremely high, meaning government finances, continue relying heavily on global energy prices. Any prolonged decline in oil revenue could place renewed pressure on fiscal stability and foreign reserves. Additionally, political uncertainty remains a significant variable. The statement references a 5-month deadlock, which reminds viewers that government formation delays and political disputes can slow reforms and create uncertainty for markets. Investors and international financial partners generally prefer predictable governance and stable policy-making environments. Another important factor is the relationship between Iraq and the United States financial system. Because Iraq's dollar transactions are deeply connected to the global banking network, cooperation with international regulators remains critical. Enhanced scrutiny from U.S. Treasury authorities has already pushed Iraqi banks to adopt stricter compliance procedures. In the short term, these tighter controls can sometimes create friction. Importers may face delays, banks may experience operational adjustments, and access to dollar liquidity may temporarily tighten. This can contribute to volatility in the parallel market exchange rate. But over the longer term, improved compliance standards may strengthen Iraq's international financial credibility. Countries with stronger banking transparencies generally attract greater investment confidence and face lower risks of sanctions-related disruptions. The statement's final phrase is especially interesting because it says that everything in the room got named this week except the IQD peg. Economically speaking, this implies that while authorities are actively targeting unofficial financial routes and identifying systemic weaknesses, there is still no indication of abandoning the dinar peg itself. That interpretation aligns with the broader pattern of Iraqi monetary policy. The central bank appears focused on reforming how the system operates while preserving the overall framework of exchange rate stability. For Iraqi dinar followers, the most realistic takeaway is not speculation about sudden wealth scenarios, but rather understanding the gradual institutional evolution taking place inside Iraq's economy. Stable currencies are built through credible institutions, disciplined policy, functioning banking systems, and sustainable economic management over long periods of time. Iraq's path forward likely depends on several interconnected developments. First, maintaining strong oil export revenues will remain essential for reserve stability. Second, continued modernization of the banking sector will be necessary to reduce dependence on cash markets and unofficial exchange networks. Third, political stability and governance reforms will play a major role in sustaining investor confidence. There is also an important psychological component to currency stability. Public trust matters. If businesses and citizens believe the central bank can defend the exchange rate, speculative pressure decreases. But if confidence weakens, demand for dollars can rapidly increase. That is why communication from Iraqi authorities matters so much. Policymakers must balance reform efforts with market reassurance. Tightening oversight too aggressively without maintaining adequate dollar liquidity could unintentionally increase parallel market demand. At the same time, failing to improve transparency could damage international confidence. This balancing act is one of the most difficult challenges facing Iraq's monetary authorities today. They must modernize the system while preserving stability, improve compliance while supporting commerce, and strengthen regulation without disrupting economic activity. For viewers following the Iraqi dinar internationally, it is also important to separate economic reality from internet speculation. Real-world currency policy is usually slow, technical, and institution-driven. Major monetary transformations rarely happen through sudden announcements disconnected from broader economic reforms. Instead, long-term currency strength generally reflects underlying economic fundamentals. Those fundamentals include reserve levels, trade balances, inflation control, banking stability, fiscal management, productivity growth, and international confidence. Iraq has made progress in some areas, while still facing serious challenges in others. Oil revenues continue providing substantial financial support, but diversification outside the energy sector remains limited. Banking reforms are advancing, but institutional weaknesses still exist. Infrastructure investment continues, but unemployment and public sector dependence remain concerns. Because of this mixed picture, most serious economic analysts view Iraq's currency future through a gradual reform lens rather than through expectations of immediate dramatic change. Another key point worth mentioning is the role of regional trade and geopolitics. Iraq sits in a strategically important position, connecting regional economies. Cross-border trade relationships, energy partnerships, and geopolitical stability all influence investor confidence and financial flows. Any improvement in regional stability can support Iraq's economic environment, while heightened geopolitical tensions can increase market uncertainty. Currency markets closely watch these dynamics because political risk often affects capital movement and reserve management. The banking sector itself also remains central to future developments. If Iraqi banks continue upgrading compliance systems, integrating international standards, and expanding digital services, this could strengthen the formal economy over time. Reducing reliance on cash transactions would improve transparency and help narrow the gap between official and parallel exchange markets. For now, the evidence suggests Iraqi authorities remain committed to defending exchange rate stability while pursuing gradual financial reform. The statement discussed today reinforces the idea that the peg has endured because the institutions supporting it have continued functioning even during extremely difficult periods. That does not mean risks have disappeared. Currency stability always requires ongoing management, especially in economies exposed to commodity price volatility and political uncertainty. But the broader message here is one of institutional continuity, rather than sudden monetary transformation. In practical terms, Iraqi citizens, businesses, and international observers will likely continue watching several indicators closely over the coming months. These include foreign reserve levels, oil prices, banking compliance developments, the gap between official and parallel exchange rates, and the pace of government reforms. If reserve levels remain healthy and reforms continue gradually, the dinar peg could remain stable for the foreseeable future. However, if external shocks or internal instability intensify, authorities may face renewed pressure managing exchange rate dynamics. At this stage, the available evidence points more toward continued stabilization efforts than toward abrupt systemic change. That is the key analytical takeaway from the statement we examined today. As always, responsible analysis requires patience, context, and attention to verified economic developments rather than emotional speculation. Iraq's monetary future will likely be shaped by long-term institutional reform, financial modernization, and economic diversification efforts over many years. Thank you for watching today's update. If you want more responsible, factual, and balanced Iraqi dinar news coverage, make sure to subscribe to the channel and like the video so you never miss future updates. And remember, this content is provided for informational and educational purposes only, and should not be considered financial advice or investment guidance.